Welcome back to Economic Business A-Level Past Paper with Dr. Adebayo. So we have still past paper of Business Paper 3, June 2021. So we have question 2 and question 3. So go to question 2, question 3. Okay, here for question 2, they said evaluate how cash flow forecasting could have improved the financial position of a business such as Grazns Italia. Grazns Italia, according to the extract, Grazns Italia was about to be bankrupt. Okay, so had it been it has used a cash flow forecast, maybe that could have been avoided. And
Yeah, according to him, he doesn't even know or even aware of the market.
So a cash flow forecast is a monthly prediction of the expected cash inflow. That's the amount of money the amount of cash that the business might make, cash outflow, the amount of the expenditure of the business, and the balances for a business in a month. So that is what a cash flow forecast is, a prediction about your inflow, the outflow, and the balances of a business within a month. So a positive cash flow is essential for the survival of a business, not for any business. A positive cash outflow is essential for the survival of a business to ensure that suppliers, employees, and government can be paid on time. Suppliers need to be paid, you need to pay your suppliers of their invoice. You need to pay your employees their salary. You need to pay taxes to government. Yeah. So these are all cash outflow. And without you without a positive cash flow, it might be difficult for you to pay all these bills.
Yeah.
Do you understand? So that's the first one.
Sustain the business.
Yeah, because you said cash is the lifeblood of every business. We talked about that before. So the first thing you have to do is define what a cash flow forecast is. As soon as you are able to define what a cash flow forecast is, the next thing you have to talk about is a positive cash outflow forecast, a positive cash flow. Because a positive cash flow allows you to pay government, to pay your employees, and to pay your suppliers, because you have to pay. Definitely, you have some invoices to pay. So that's the first thing. According to Extract F, Grazns Italia ran out of cash despite having regular board meetings. If the management has paid more attention to the inflows and outflow of cash, then it might have been able to spot the potential cash shortfalls and taken appropriate steps to reduce or avoid it. Do you see how I'm making the steps here? Better use of cash flow forecasting may have helped the management to see the impact of Grazns Italia of rising wages, increasing food costs, and higher rents. These are the causes of it not having cash. Yeah. Plans could have been made to deal with these external factors. They are beyond its control. But with cash flow forecast, there would have been plans ahead to solve that issue. Does it make sense there, please? Does it make sense, please?
Yeah, it makes sense.
So, however, the cash flow forecast is an estimation, which means it may not be accurate. So that's the first setback when it comes to cash flow. It's an estimate.
Yeah, depends on the data you have.
So
if you have bad, inaccurate data,
that's another point. That's another point.
You get bad decision making.
That's another point. But even if you are accurate about it, you have information to use. Yeah. You have information to use, but still, it is an estimate. It's a prediction. So it might not be accurate. So that's the first setback. 2, cash flow forecasts can be affected by external factors like the PESTLE analysis. I like that. You mentioned the PESTLE analysis: political, economical, social, technological, legal, and environmental factor. Like that. So cash flow forecasts can also be affected by that. Do you get the point there?
Yeah.
And the last one is, according to the Extract F, there was a perfect storm which resulted in the cash flow problem rather than poor cash flow forecasting by the management. So it might not as well be cash flow problem. Because it said, according to Extract F, there was a perfect storm which affected, yes.
There was?
Yeah, Extract F.
Did I forget it?
Yeah, it's there.
Oh, I simply wanna where made more than. Did I miss it?
Yeah. I saw it when I was. I saw it. Where did I see that? I mentioned it.
It's only F in the
Yeah.
I was like, wait.
Yeah, it was around. Yeah. In place, we are trying to manage what they could call the perfect storm.
I went increasing for.
Yeah. So
Okay, it seems it's not their
it's
problem.
not really it's not really about forecast, but this thing
The
they are,
environment.
yeah, the environmental factors that it could not really, cash flow could not even solve. Do you get it?
Yeah,
So that's about question 2. Any question about question 2? So I think they are clear now, right? Yeah, and the points that you are missing, you get them now, right?
Yeah, sure.
So go to question 3.
But it's getting accurate. It's getting there, right?
Yeah. You're getting better, man. Question 3 now. So for question 3 is about Ansoff's matrix.
Okay.
So for question 3, they said using Ansoff matrix, evaluate whether the takeoff of Graze is a good corporate strategy for Unilever. So first, what is Ansoff matrix? Ansoff matrix allows a business to analyze a range of possible growth options by considering the risk that is involved. Do you get the point? Yeah. We want to look onto how we can grow, or the opportunity of growing. But what are the risks? What are the potential risks for each opportunity? That is what Ansoff Matrix is about. For Unilever is a large conglomerate. And when we talk about conglomerate, it means a business that can diversify. Yes or no? Okay.
I mean, they have 400 brands.
Yeah. So
from different markets.
Yes, that's why I wrote it here. I said Unilever is a large conglomerate business with 400 brands in a range of different consumer markets and countries. So taking over Graze is an example of an inorganic growth. Why is it inorganic growth? It's an inorganic growth because Unilever is going with other resources. It's inorganic. Yeah. But didn't Unilever develop its own products? That is organic growth. Do you get the point I'm making there? So that's another point that you did not talk about. Taking over Graze is an example of inorganic growth and can help Unilever diversify into the market for healthy snacks, as well acquire a business which is also established in the direct-to-consumer channel. Yes, you mentioned this, direct-to-consumer channel. But not mentioning inorganic growth simply means you are losing some money, because you have to let us know the kind of growth Unilever is going into. And that's an inorganic growth. I think that is clear there. This could help to complement its existing products, often in its food and refreshment units. Graze is already an established business, yes or no? Yeah. So therefore, giving Unilever a say in the markets, which could result in higher profits for Unilever. According to Extract H, there's an increase in the world snack food market that will be worth 192,800,000 by 2023, according to the extracts. I think you saw the extract, right? Yeah. Let me just share the extracts. Where is it? Okay. So the snack market is expected to grow to 192,800,000 by 2023. And that is huge. Yes or no? Yes. So that's the point did you mention the point there? I think you did. Yeah. You did. I think you did, yes. You talked about the growth. Yes, you talked about it. I think you did. You did talk about it. That market is going to grow. Yeah, you talked about it. I know you talked about it. I'm so sure you talked about it. Even you mentioned the figure. No, you didn't mention the figure, but you said it is expected that in the forecast in 2023 that the market will be bigger. Yeah. But you didn't mention the figure. Yeah. So always try to mention the figure, please, because you are making reference to the data. I didn't mention, according to H. Yeah, you didn't mention the figure. Yeah. Please always mention the figure, because it's a reference. So you need facts and figure. You get the point here? So for me, I wrote, according to Extract H, like I just showed now, there's an increase in the world snack food market that will be worth 192,800,000 by 2023, with nuts and seed accounting for approximately 1/3 overall. However, according to Ansoff, diversification can be more of a risk than market penetration and product development. Ansoff really talked about product development and market penetration. Ansoff thinks diversification is a huge risk. compared to market penetration and product development.
Not
So
only you have to develop a new market, but also a new product.
a new product. Yeah, but the point is, when you diversify, you might not have, one of the reasons why diversification is risky is that you might not have perfect knowledge about the market you are going into. But when you have
but with inorganic growth, you have a company like Graze with expertise.
Yes, fine. But what about you developing your own products instead of spending so much to buy Graze? You have to look at the pros and the cons too. Do you get the point I'm making here? So for Ansoff Matrix, it is based on product development and market penetration instead of diversification. So that's another point about Ansoff there. I think you get the point. However, according to Ansoff, diversification can be more of a risk than market penetration and product development.
Yeah.
Unilever could have developed its own range of healthier snacks rather than spending 150 million acquiring Graze. Yes or no?
Yeah.
That 150 million could be spent on something else. Unilever has already acquired 3 other businesses within 3 months, which may see the business overstretch itself in terms of finance. It already acquired 3 businesses.
Which risks Unilever inability to control.
Yes, Unilever might even suffer for diseconomies of scale.
Yeah, because of it.
Yeah, you should have talked about that. That's another thing. So expansion.
Yeah.
Yes, always whenever it comes to expansion, when you're talking about the setbacks, think about Ansoff Matrix, think about diseconomies of scale. It gives you points.
Yeah. Okay.
So I didn't talk about diseconomies of scale here because I'm already done with my points. So like I said, Unilever has already acquired 3 other businesses, and spending on Graze could put a strain on its financial resources. Yes or no? Overall, look at my own summary now. Overall, acquiring Graze may allow Unilever to increase its product portfolio. So that is the point.
Yeah.
So Unilever might be able to increase its product portfolio because when you buy such a successful business, it increases your product portfolio. I think it's clear.